Before I'm going to place a trade, I need to make sure I understand these three important factors. I need to make sure I understand what is the overall market context. I need to identify the proper key entry point, and I want to make sure I'm taking a high probability setup that aligns with price action rules. So what is the structure in front of me? We can see that the structure is basically indecision. And every single time I'm trading indecision, it is some form of a trend range because it is easy or quite easy to identify some version of uptrend or downtrend. So this is a trend range. I can see that we have 4 confirmations already of the resistance, but there is some bullish tilt to this trend range. There is bullish imbalance because each new major low is higher than the previous one, which puts me in uncomfortable situation because I cannot really sell prematurely, but at the same time, I cannot really buy too close to these highs. So once I'm trading a structure like this, I really need to be careful, and I really want to make sure the setup is forming according to rules and I'm not jumping the gun, because this is a slow trading range to start the day with, low volume, and you can see EMA very flat and a lot of micro price swings up and down. So the best thing what I'm going to do is right now to observe how prices are reacting. Okay, and we're trending higher, so I'm going to redraw the shortened channel because even if the trend range is this tight, there are always small channels working within and following the trendline rule. You can see another confirmation of the resistance indicating to me that this is shaping up to be a trend range like structure. We're breaking lower. Am I thinking about selling? I'm not really thinking about selling. Why? Even though I see such a massive push down, well, it's because we had bullish imbalance working inside of this trend range so far. And this is typical in bullish imbalance, that prices will make their way all the way below the EMA, and this is where the correction will end and the bullish imbalance will kick in again. So if you want to sell, you definitely have to do it high at the resistance. You cannot sell at the very low because this is exactly where the bullish imbalance in the trend range will kick in and market will continue working higher. I cannot go long at the same time, however, because I'm below EMA and I never know how many pushes low there's going to be. So you can see completely flat EMA, pretty much nothing for me to do. I cannot sell these lows. You can see some small micro support. Okay, we keep trading higher. I'm expecting new high for this initial uptrend. I'm going to redraw the downtrend again. You can see today I'm starting with really unclear price action. So the way I'm just approaching this, basically being completely patient, because I know that on a balance of probabilities, the structure should get clear at some point. You know, the market opened 30 minutes ago and there is no reason for me to rush trades. That's part of being a trader, just waiting for price action to unfold and offer me some clear opportunity, clear patterns. So I'm just waiting, and you can see the bullish imbalance is really kicking in strongly. For this reason, I cannot really sell. If I'm going to zoom back, most breakouts of trend ranges will fail, correct? And this has been a proven resistance so many times. But due to the bullish imbalance, it is hard for me to track how many small micro legs higher there's going to be. So I'm not really thinking about selling just yet. Alright, but at the same time, I cannot go long because I would be buying the breakout at the very top of the resistance. So really no clear way for me to approach this according to price action rules. And by the way, the option right now to draw wide uptrend will emerge. You may be thinking, okay, it is okay for me to draw uptrend like this. And if you studied our last video diligently, you already know the answer to this question. This channel, even though it has multiple confirmations at the bottom, is not valid. Number one, notice how much empty room there is at the top. And number two, the channel is too flat, taking into consideration the entire trend range. Almost no channel should take into consideration the entire trend range. And how do I know this is a trend range like structure and not a bullish trend? Because no bullish trend has 1, 2, 3, 4, 5, 6 confirmations of one static level. So you can see that this is a clearly trend range with just bullish imbalance. So there's so much room at the top. And by the way, prices will break the channel. It's no longer going to be correction because you're going to make low that is lower than the previous one, not higher. And the downtrend is going to be too strong and market most likely may continue working lower. So for this reason, just like we talked about in our last video, you can see how price action repeats over and over again. This is a very slow trend range. You have static proven resistance which doesn't form in trend, because in bullish trend there are no static highs like this. There's always a high and high low. So I'm not going to select this wide the channel. Okay, and I can see right now the market is breaking lower. So this is what I want to see. I can see failed breakout, strong push below EMA. So when I was watching this, I was contemplating taking failed second entry long. because we're pulling back into trading range. You broke above the resistance, which means all the weak bulls are going to long here. They're going to pile their orders thinking that, okay, I'm a breakout trader. I finally will see market roll up higher. But this is not what's going to happen. This is where institutions will liquidate their position, take the other side of their orders, and it will result into breakout failing. Because according to price action rules, most breakouts will fail. But due to the bullish imbalance, we don't really want to pick the top just yet. So when I'm watching this, I'm thinking about possible failed second entry long, but it needs to fit and form really well. Why? Because we had a bullish imbalance. You can still see there's a series of high lows. And I don't want to be stuck selling at the end of the correction phase. You can see it can be a little bit risky. So I can see the failed second entry long is forming, but it is a bullish bar and not fully touching the EMA. So that means I cannot sell. This is not sufficient enough. It needed to close right below EMA. Strong, convincing, bearish tier 1 signal bar. This is not enough. I'm being patient. And you can see, good thing you waited. Eventually, market is acting as you would expect, finally pulling back into the string range. And this is where all the traders who are buying and focusing on this as uptrend, they are exiting their positions because they're forced to. This is why you can see such a strong momentum, because all their stop losses are being moved higher and higher. Suddenly continues working lower. I have a break, new extreme, first leg down, pull back, second leg down. So I have new low for the downtrend right now, 2 legs down. This one was stronger. And at the same time, I forgot to mark this initial bullish channel, which is giving you confirmation that you don't want to be looking for longs. And by the way, you don't really want to be drawing bullish channel like this as well, because you'd be drawing a channel for the breakout that a lot of times will fail. So this is exactly where the market momentum will switch. So you don't want to be drawing trend line too late for the move that is already breaking out of the trend range. So right now, the structure is bearish, but I have a break in new extreme, so I need to be a little bit patient. I have a second entry short, but I cannot take it. I have a break new low and 2 legs down. We had, at the end of the day, bullish imbalance. Okay, we have double trap potentially, but I still cannot take it. And this is where you really have to be patient, because overall structure is quite unclear. Still bullish imbalance, still 2 legs down, break new low. We have a break new high of the uptrend, yes. It's getting a little bit congested. The bar didn't take higher above this bullish bar. Now, when I was watching this, I was already trying to look for some wider pattern. Something like this. Because this is right now offering me 2 swings to set up the trend line. And third swing confirmation, but I need to get lower high. We had bullish imbalance, so I don't know if we're just going to go lower just yet without confirmation. Lower high would be confirmation setup that this trend line is working. And you can see it's getting too congested. So unfortunately, even though you can see market working lower as expected, there's pretty much no way for me to enter because there's a strong congestion here. What I'm going to do is just adjust it slightly. Because right now, as you're breaking lower and breaking lower, the target for prices is to reach the low of the day key level. This has ended up being a large downtrend. Okay. And we can see we have potential overshoot. Because we are far away from EMA, we broke the downtrend. However, what is the bias right now? I'm going to zoom back. When I'm watching this, trend down is the main pattern, which means I'm looking for high probability setups to sell. And you can see the structure is suddenly getting easier to analyze. It was a little bit confusing here at the start, but now we are starting to have series of lower highs, lower lows, clear downtrend. We expect for prices to reach the low of the day important key level. So I'm counting for second entry shorts, 2 leg pullbacks, or failed second entry longs. You can see we only have first entry short, and prices are breaking our trend line again. And this is not how overshoot would react. Overshoot should break the channel, generate strong bullish momentum. The fact that you didn't even touch the EMA and form another break of trend channel line leads me to believe that the channel is actually just going to be stronger and wider, because this is not how overshoot is reacting. And you can see prices are breaking lower. Now we finally reached the roll of the day, and now it looks like overshoot again. So when I was watching this, I treated this as overshoot, which means if I get a second entry short, I cannot really take it. We have a new low, first entry short, pull back, second entry short. We form new extreme for the uptrend. You can see there are always small channels even for the corrections. So this bullish channel has a break and a new extreme. So that means that according to rules, the uptrend played out. All right, this is a second entry short. But notice what is happening. Prices push below EMA and form a lower high confirmation setup of the second entry short. So even though I had overshoot here, the fact that I had a break new high is indicating to me, okay, there is no stronger uptrend. You push below EMA, which is confirming the bearish momentum. And now we have even lower high confirmation setup. So that is a good sign that I'm safe to start resuming looking for shorts after the overshoot. So this is a first decent high probability setup for the day. And you can see you needed to wait quite a long time before you were rewarded with a nice setup. So just because the structure is looking a little bit unclear at the very beginning, you cannot really get shaken by this. The price action can be much cleaner and much easier to analyze in the second portion of the day, which is exactly the type of situation that happened today. You can see market continue working lower. Okay, so when I was watching this was a little bit tricky because the channel kept getting larger and larger. But if you have so many overshoots, this is where you have to deduct that the channel is probably stronger and wider, because you really shouldn't have so many overshoots. There should be one erratic spike. The fact that you keep overshooting and keep overshooting means that the channel is going to be strong and it's going to be a little bit wider. However, this is still a bearish downtrend. I'm waiting for correction to sell. It needs to be a high probability setup. I'm not interested in taking these first entry shorts all the way down here. You definitely don't want to be thinking about buying, because from this very top all the way down here, we only closed for a brief time above EMA 1. So this is a strong downtrend right now developing. You don't want to be thinking that you're just going to ride it back. Don't even think about buying. It's counter trend entry. You want to follow the trend, because that's how will you stack the odds on your side the most. Okay, and prices keep pushing lower and keep pushing lower. Okay, so at this point on, I have to adjust. There's probably a little bit better fitting trend line. Let me just adjust like this. And this fits much better. So you can see there was a little spike, a little consolidation, and a brand new downtrend that makes it fit a little bit better. The prices are fitting nicely inside this channel. You're confirming the trend channel line. You're confirming the trend line. So once I'm playing a trend structure like this, I'm just playing around with it because I want to find the proper trend line. I need to find my pattern, because this will keep me on the right side of the market. If I'm not playing the trend line rule, I don't know if the trend played out or not. So I don't know if I'm looking to sell or if I'm looking for reversal. Here I know that I'm looking to continue to sell the market because the downtrend is in play. So many lower highs, lower lows. EMA is pointing straight down. We completely ignored basically the low of the day. We bounced here once, but we sliced through like it's not even there. We have a new low, first entry short pullback, second entry short, but it's formed above EMA and you're not touching the trend line, so I cannot take it. Had it formed below EMA, it would have been good second entry short to take because it's the lowest low where I reset the count. First attempt to sell, pullback, second attempt to sell. But since you push above EMA and without key entry point, it's a little bit aggressive. You can see even this setup worked. So now you have to a little bit take a step back and think about what kind of structure you're trading, because even the second entry short above EMA worked, resulted into very strong sell-off. This means this downtrend is getting stronger and stronger, which means the setups may be a little bit more aggressive. We're working lower. We're working lower. Okay, we're confirming the trend line. I have it drawn a little bit off. I want to see confirmation like this. Third swing confirmation. Just going to quickly adjust it. Okay. And we have new low, first entry short, pullback, second entry short. We broke above this trend line, which means according to rules, we expect for prices to form new extreme. We're not expecting reversal. We expect for prices to test the lowest low first according to trend line rule. And also I can see that we have small trading range, EMA flatten a little bit, and visually this can look like first leg here, pull back, second leg here. So this right here is a second entry short, And this time you have the resistance as a supportive pattern. So this is a decent setup for a more advanced trader. If you want to take a safer setup to capitalize on prices going all the way down to creating new extreme, you want to wait for failed second entry long. Alright? But you're at the top of the resistance, you're breaking the channel, and it is a very strong downtrend. So if this wasn't such a strong downtrend, you're a little bit leery selling right above the EMA. But since you have the resistance, you broke, you expect new extreme according to rules, and the downtrend has strong characteristics, it's okay to take a second entry short. Okay, prices are breaking lower. Prices have yet to still reach new extreme. You can see this low came up short of this low right here. So we still need to get new low according to rules. And we have the failed second entry long. New high, first entry long, pull back, second entry long failure. Big bearish bar, closing strongly below EMA, very strong downtrend, high probability setup. We expect new extreme. And shortly after, you even have safer setup, which is a second entry short. This is the lowest low where we set the count. First attempt to sell, pull back, second attempt to sell. Analyze this signal bar. It looked so strong bullish, and at the very close of this bar, everybody started selling. It resulted in a very strong, very stim at the top. So this is a very strong reversal bar, closing below EMA. You expect new low according to price action rules. You broke the downtrend, and it is right after the failed second entry long as well. So this is a definitely great setup according to rules. And market finally made it to all the way down to new extreme. So I'm gonna identify the new extreme, and you can see the price action suddenly was a little bit easier to identify. This is why you cannot really force entry, and with experience, and unfortunately you will have to get burned a lot of times if you're jumping the gun too quickly when the structure is unclear, like today we had the indecision at the start. You're gonna set yourself back. You're not going to be able to perform once you get structure like this, because if you take a couple of losing trades early because you're trying to jump the gun too quickly or you're eager to make money, you'll not be able to capitalize on this beautiful downtrend working lower, where there are eventually high probability setups forming. And you just need a couple of these to catch a 1 or 2 decent runners, and you can ride it all the way down. I'm going to redraw the uptrend. Okay, now we have new low, first entry short, pull back, second entry short. Here we have second entry short, but prices just form a break and a new extreme, which means I cannot really take second entry short just yet. If I want to sell, I want to see confirmation setup. Just like here, we waited for a lower high after the overshoot. Here, if I get lower high, or technically it would be failed second entry long counting from this high, I can consider selling because it will be confirmation from the market that the bearish bias still remains. And now we have a failed second entry long. New high, first entry long, pull back, second entry long failure. Notice closing strongly below EMA, but look at the initial signal bar. It was bullish doji, and by the time bearish bar formed, this is indication that the downtrend is truly strong, so I wouldn't mind taking this as a double bar entry. But here the signal bar is really big because your stop loss has to go still above the initial doji right here. So you would really have to wait for trigger here and drop your limit order, let's say here, and hope you're gonna pull back, but you can see it never formed. There was just push down. You would have to enter at the very low, which would make your risk really big if prices went against you. So the risk to reward ratio here is not the best. But if this setup next time will form a little bit better, failed second entry long, right off the EMA rejection, confirmation that we may have continuation of the bearish momentum. And we just had first leg down, and the downtrend was strong, so it is likely that we may get the second leg down. I can't really sell at these lows. I need to sell when the correction phase will end. And you can see the correction phase will end in the form of a two-legged pullback at the key entry point. And since the downtrend is strong, the key entry point is the EMA. You can see this is where all the correction phase is ending, right at the EMA, and this is where the push phase is starting. So this is why we're using the EMA to help us, make it a little bit easier to see where the push phase may begin if the trend down is strong. So it is a supportive indicator only. We're not relying blindly on EMA to sell every single time it touches it, And we just use it to see if there's a decent setup to like a pullback and the uptrend played out. So it's a good sign that we can sell to look for continuation of the bearish momentum. Okay, market is strongly trending to the upside. We have a little bit of overshoot. I'm going to redraw the channel. At this point on, what am I expecting? I just had 2 legs to new extreme, and at the same time, I have this bullish trend working higher. So we have 2 conflicting patterns. Downtrend played out with 2 legs down, and a stronger bullish correction is starting. Now, this is generally where you want to be patient again, because it was easy to grasp the concept on the way down, and now you have 2 conflicting patterns. Generally, if the downtrend is strong, which it was today, you're still expecting for prices to keep continuing working lower because this was a strong downtrend. So the goal right now is just to wait for some clean setup. I'm not really forcing shorts and I'm not really forcing longs. I'm just going to wait for price action will do, and you can see no clear setup on the way down, just a first entry short. Not really interested. We have a breaking wall of the downtrend here. Okay, you're pushing above EMA, which now you'd be expecting for prices to reach the new extreme of this initial correction. All right, and we can see that the bulls cannot reach new extreme for this initial channel. This is how strong the downtrend is. Again, it's resuming, and we can see the resumption of the bearish momentum by a strong push below EMA. So now we have new high, first entry long, pullback, second entry long. So what am I expecting? I'm expecting another push down because downtrend was strong. Bulls had their chance to create new extreme. They failed, managed to push all the way below EMA, and high probability setup right now for us to capitalize on the bullish trap is going to be felt second entry long. And here we have great signal bar right close to EMA. Look at this gorgeous bullish bar. A lot of bulls got trapped. New high, first entry long, second entry long. Failure. Great high probability setup. Right near the EMA, fell second entry long, and market continue working lower. And you even have lower high confirmation setup of the fell second entry long. It was close being new low, first entry short, second entry short, but you broke the low where you're counting from. So this is technically just a lower high confirming the fell second entry long. But EMA held again, and now you're really confident that bulls are getting trapped even here, taking the high low, that you expect for prices to really keep working lower because all the bulls got trapped here once you're below EMA. And I'm gonna take a step back to remind yourself so you can see how strong the downtrend is. So you're not really even thinking about buying, you're just letting the bullish correction play out. And once you see a moniker of clue that the bulls are over, that's when you start to resume the sells again. Market keeps pushing higher. New low, first entry short, pullback, second entry short, but it's above EMA. This downtrend also needs new extreme. And notice what you have. We have second entry short, which we cannot take. Uptrend is in play. It looked like the market may reverse, but you push strongly below EMA and you form a lower high confirmation setup of the second entry short. First entry short, second entry short, strong push below EMA, big bull bar. All the bulls got trapped, and a lower high confirmation setup of the second entry short, and this downtrend needs to get new low. You're below EMA. The failed second entry long formed bad. We cannot really take it. New high, first entry long, second entry long failure. You're just counting for long traps because you expect for market to push lower, and lo and behold, market kept pushing lower, and now it's getting too late. Tools that can help you to stay away from the bigger uptrend are the fact that you have multiple confirmations of the resistance, which is not really supposed to happen even in weak uptrend. You generally should always have the high that is higher than the last high, at least by a couple of points. You can see eventually downtrend got proven strongly, and at this point you can see a lot of small bars slowly but surely working lower. You can see very minimal bullish pullbacks. This is the stronger correction, but if you see very strong downtrend, you don't expect reversal. There can be multiple larger channels developing, and they may be correct because that's the nature of very strong trend. And every single time you push back below EMA, that's the sign that the bearish bias is resuming and you want to start looking for sells again. So I hope you had a decent trading day. I hope you didn't get chopped at the very beginning, as it was very confusing. I sat on my hands just waiting, and eventually you can see the bias got cleaner and it was a good price session to finish the day. So I'm going to see you guys in the next one. Take care, everybody.